very important 3 things in 3 minutes this week. So let's get into what the Trump presidency means for the housing market and mortgage rates. So first off, let's just be clear. We know Donald Trump is big on promises, short on details, especially during the campaign season. So while I know that some of his maximalist positions might be just that, bargaining chips, and he'll climb down from there, I do want to talk a little bit about some of his core promises and what that would mean for our housing market. So the first thing is tariffs. An aggressive position on tariffs could mean higher costs on imported goods, could impact everything from consumer products all the way down to construction costs. And it could very well be inflationary, which would be negative for interest rates, meaning interest rates could go up if we start to see an inflationary environment creep back in. Additionally, immigration. If he does move forward with this plan to deport huge swaths of the American population, we very well may see, again, a rise in costs and more expensive home construction and a lack of building being done in the United States. Finally, deregulation. A big push for Trump is to deregulate across the board. Part of this could very well mean Fannie Mae and Freddie Mac, which are the government clearinghouses that banks sell their mortgages to and create mortgage-backed securities. So if that goes away, there's no telling what that does for the cost to finance, and it could be very disruptive. Now, there are some that talk about the Trump tap dance on tariffs, meaning, as in previous iterations of his presidency, he may well be talking big, but not look to disrupt the marketplace. If we learn from past policy, he might very well be more cautious in using tariffs as a tool and not try to disrupt basically the entire economy by pushing huge increased costs on imported goods. So, there are some that argue that President Trump will be good for housing as a whole, that there is a widespread belief that his economic policies will lift the economy, which will make people feel more confident in buying, may push people to sell and then rebuy. I think the biggest thing we have to look out for is what do the headwinds look like? Does inflation go up? Do interest rates go up? Do interest rates come down because he's forceful with the Fed in pushing them to lower rates? So there's still so much to be said. Right now, mortgage rates are just above 7%. They have ticked up over the last month and a half or 2 months, as you guys know. And we'll have to see what the Fed rate cut last week does for mortgage rates. Now, keep in mind, the Fed does not directly set the mortgage rate that your clients get, but it has a huge impact on where things are headed. And we do expect a few more rate cuts in the latter part of this year and early next. All right. We'll see how this plays out. Y'all got this.